Good day, traders. It's been a while, huh? Yeah, I've been busy trying to get better, trying to heal up, as they say. We had a couple trade setups today, but you had to be there at the time in which they set up to get in the trade. You can't be there after the fact. Even though I'm showing you after the fact here, but I'm showing you, as a learning lesson. Like, this is what you look for when but you got to be there at the right time to do these trades. You know what I mean? You know what I mean, Jelly Bean? So anyway, we have a high and higher highs. We're always looking for higher highs, lower lows, double tops, double bottoms. That's what we're looking for. I've never changed anything here. It's all the same shit over and over again, but it's the same stuff that works over and over again. If you use my structure on the charts, which is these two moving averages, gives us our direction only when we need it, okay? And the other things I look at, whether it's, double tops, double bottoms, higher highs, lower lows, it all goes. Okay, let me show you this here. Let me show you this trade here, okay? We have a high and we have a higher high, okay? So as long as you are here, right at the open, 8 o'clock is where the time. 9 o'clock. Is this 9 o'clock? No, it's 8 o'clock. When the time started at 8 o'clock to look for a trade, you look for trades for between 8 o'clock and 11. 11 sometimes a little later, sometimes 11:30, but usually nowhere past 11. So between 8 and 11. So this is 8 o'clock right here where the shade of the chart changed dark, lighter right here. Okay. So what are we waiting for here? Is this a trade to get in? We cross down, No, it's not. It's not, because there's no space between the two moving averages. We need space like this. We need separation. Once you see the separation, then we know it's safe to go in there and trade. And most of the time, I only trade the 5-minute time frame, okay? Or the 1 minute if it's really tight and it's really like no trades, then I'll go down to the 1 minute. And sometimes you want to look at it farther out and you want to look on the 15-minute, Just depends what you want to trade, what you want to do. So, here is the other lower low, a lower low on the indicator below. Higher highs and a lower low, the opposite. You see one's going up, one's going down. What does that mean? They're diverging from each other. That's why we call it divergence. Yes. And I knew you knew that. Once I was shown how to spot divergence before it happens, and I started trading it, is like the light just turned on. And where did I learn how to trade divergence from? From Mr. Russ Horn. He lives in Calgary, Alberta. He's another Canadian trader like me, and he knows his shit for sure. He's a really good trader, really good trader. It's really funny how a couple good traders, like, both come from Canada that happen to be on YouTube here, eh? Yeah. So anyway, I just want to show you the entry point, okay? So we wouldn't sell it right here because it didn't cross down good enough. We need some separation. So you see right here? So right in here is where we would have sold it, somewhere in the last 3 candles here, okay? And it would have rammed right down because that was the open of the U.S. stock market, okay? That's why we had that big candle down. It was the opening, okay? So this would have been a winner. And then after that trade, after you've done that trade, the only other trades you could do is this. Let me show you. Let me show you, ladies and gentlemen. See, we wait for candles to close in the opposite way of the trend. The trend is down. The trend is down. Why would we only be doing sell trades? Because the 5, which is this white dashed line, is below the 7 EMA. That's why. When the 7 EMA goes above the 7, or I mean the 5 EMA, we can only do buy trades, okay? But when we do sell trades, we're waiting for the price to retrace back up, and then we look for a sell. If for a buy trade, we look for the price to retrace back towards the 5 EMA, and then we buy the dip and sell the rip, right? And then we wait for it to go up. Yeah, like that. We don't really have the ultimate spots to get in, but you'd have to get in after there was a little pullback. See on here, we have this wick. See, it would have been a buyer right here, okay? And up here, there's a little bit of a wick. It would have been a buyer right here. You only can buy when the market's going up, but you have to buy a retracement. So it's kind of like going down at that point in time. See, these two little stupid lines on the chart, I know they're stupid, but they work, and they tell you what to do and what not to do, okay? So they don't tell you to buy when the 5 here is totally separated from the 7, okay, and the price is going down. They don't say buy until there's an opportunity to buy, which is right there. I mean, right over here is the buying, and this is where you sell. And the only reason we sell is because the 5 is below the 7. But the real reality, why do we sell? Because of this higher highs divergent formation on the chart. That's why we would sell from up there. Because it's telling us to. Because the two moving averages are in sync. They're always telling you either to buy or to sell or to not do nothing and sit on your fat ass, and that's it. You know what I mean? That's all. That's it. That's all. Once you stick to those rules, even write them down on a piece of paper. I can only sell when the market does this. I can only buy when the market does that. And that's that, you know? So anyway, let me show you this one more trade, and then I'll end this video. Okay, so we have a low and lower lows. See that? Yeah. So you see how if I line up from this here, it goes right down to the bottom of this low right here. So let me show you. So right here, see? Boom, just like that. So I have one going down, one going up. What does that tell us, ladies and gentlemen? It tells us it's divergent. Okay, it's divergence, man. Very simple, very easy to do. So where would have we been a buyer here? Let me show you to be absolutely safe and sure. It's right there on the opening of this candle, right after this little wick here, after it retraced. You would have bought right there, and boom, up it goes. Here's another one right here. You would have bought after it retraced. You would have bought on the close of the candle. You would have bought, and then now it's going up. Maybe we're going to go right back up to the highs here again. I don't know. It looks that way. Maybe. Only maybe, though. Doesn't mean for sure. But anyway, that's our two divergence setups. We had a sell trade from way up in here. Sell it. Down it goes. You had a retrace trade right here. We would have sold it here again, and down it goes. There's another one right here. Let me show you. Right here. Okay, there's another retrace candle. See this higher closing candle? Then when this next one opened, we would have sold it, and down it went. We would have made profit. Here's another one right here. Sell it right here again, and down it goes. See? I just didn't put the arrow on there, but I'll put it on there just for you guys to see. So right there, see? Retracement up. This candle closes higher. On the opening of the next candle, on the close of the candle, that's when we would have sold it. You see, we're always looking to How do I explain that? Oh, I just had it in my head and then it left. Oh boy. Oh, it's not how the candle opens, it's how it closes that determines the near-term trend and when to get into your trade. You get in on the close of candles, always on the close. And the open too if we're buying, okay? Like right here, see we retraced. We retraced right here. We would have been a buy right here. Up it goes because the candle closed up. The 5 is above. Everything lines up to tell you to buy right in here. See that? That's how you do your trading accurately, where you're always buying when you're supposed to be buying and you're always selling when you're supposed to be selling. But you got to do it by the rules that I explained to you. You know, once you get into the knack of it, into the then you're gonna be successful. You're gonna be selling on retracement candles. You're gonna be selling, the rallies and buying the dips. Buy the dips, sell the rallies. That's what I was taught from a broker. He was a grain analyst. His name was Tim Hannigan. He knew what he was talking about. Yeah, and that's where I learned that from. It's not how it opens, it's how it closes that determines the near-term trend. So what he meant by that, when he would say that, he was looking at a daily chart, like soybeans and corn and wheat. He'd always be looking at the charts and where they close and where they open, And even though we're not trading the daily charts here, we're trading the 5-minute time frame. We can still apply those same rules to that situation. And I've been doing it since 2009, even before that. Well, actually, no, probably 2010 or 11, because I started looking for divergence in probably 2007, and I didn't really fully grasp it and fully understand it until 2010, 2011, somewhere around there. So trust me, I spent more than 2 years studying these charts before I felt confident enough that I could trade this divergence setup and how the candles open and how they close and etc. to feel confident in myself to do these trades, okay? And there's some things to, once you learn it and you basically weld it inside your brain, you can't lose it, right? You can't lose the rules. They're there. You just look at the chart, and within 2 seconds of looking at a chart, not even 2 seconds, 1 second, it tells you, oh, I can't buy now, but oh, I can maybe sell if this happens, or whatever. And that's the way you got to trade. Oh, excuse me. That's the way you got to trade it. Because if you just jump in any old time and you say, oh, I think it's going to go up. Oh, I think it's going to go down now. You can't trade based on that. You got to trade what the candles tell you on the chart. That's what you got to trade. Okay? Anyway, I hope you guys learned what I know here and how I trade. And you don't need anything too fancy or whatever to trade. All that I use is 2 moving averages, the 5 EMA and the 7 EMA. Let me show you here. See the 7, shift 1, exponential on the close, moving average. See? Click OK. And this white dash line is the 5. Oh, stop that. There. No shift, 0 shift, exponential on the close. Okay? The 5. The 5 and the 7, that's all I use. And the OSMA on the bottom of the chart. Okay? I've been using this same charts for 15 years. Longer even. So, you know, I never forget it. I know what to look for. As soon as I open up a chart, I know what to look for. I know what to do, and I know what not to do. Anyway, I want to thank all of you for watching and listening. Good luck and good trading. We'll talk to you again. I'm not giving up the videos yet. Okay? I haven't did a video now in over a week or so. Um, yeah, I had some new pills and stuff I was trying out, and I bought this shampoo. Um, you know, because the top of my head is a little bit bald. So anyway, I bought this shampoo. I don't know for sure if it's gonna work, but they have me convinced it's gonna work. So you wash your hair with this stuff, you leave it in for 2 minutes, and then you rinse your head, you know, the soap off, and after 3 to 6 months, your hair's gonna grow back. I know, sounds crazy, stupid claim, you know, but I believe it will work. And yeah, if if it works, which I'm pretty sure it's gonna work, I'll show you in the video. I'll show you the top of my head where it all grew in. I'll show you. But for now, it's dormant right now. It's all the follicles, all where your hair is supposed to grow, they're all blocked right now with DHT. DHT is something that comes out of your scalp that stops your hair from growing. That's why, and DHT is a big factor with men, not women. So anyway, we'll see if my hair will grow back. I hope so. I'm also on this other pill because my legs are all swollen and I can barely walk. You know, I'm on these other pills also. I'm hoping for those to work. I can already feel those starting to work. My legs, from my knees down, the swelling has reduced. And the fluid, I think I'm pissing out more fluid now. So it's the lymph, they call it lymph, LIMF fluid below my legs. It's, you know, when I wake up, I got to go for a wicked whiz, you know, because all that fluid that was stored in my legs below my knees, it's coming out. It's going bye-byes. So hopefully that's going to work for me too. I don't know. Wait and see. But anyway, good luck and good trading, traders. We'll talk to you soon.